We're glad to have you back now. Following the recent rate hike by the Central Bank of Nigeria, 10 Nigerian bank stocks depreciated in value at the close of trading as investors craving for fixed income securities widened. Well, according to information sourced from the website of the Nigerian Exchange, 10 banks lost about 96.325 billion naira in a day. However, in a twist of fate, equities market reverted well in totality to the positive movement last week after halting the upward trajectory penultimate week, with investors gaining 596 billion naira at the end of the week of trading. Well, this was despite the profit-taking activities in heavyweight in the telecoms and the consumer goods sector, just as the NGX emphasized the need for diversification of portfolios by investors to ensure enhanced return on investments. Well, I introduced him earlier. He's also joining me via Zoom. He's the Managing Director and Chief Business Officer at Optimus By Afrinvest, Mr. Ayodeji Ebo. Thank you so much for your time. It's good to see you this afternoon.
Good afternoon, and thanks for having me.
Yes, 150 basis points. Yes, that's the increase from 11.5% to 13%. What really is the direct impact of this on the capital market or trading at the exchange in its entirety?
Okay, thanks. And one major thing that I would expect is that the fixed income yields in the fixed income market would improve, and as a result, the stock market will become less attractive. And the main reason is that investors invest for return, and when you look at risk reward, the fixed income market has less risk, and if the fixed income market begins to offer more attractive rates, investors will take less risk. So we'll begin to see a rotation out of the stock market into the fixed income market, because once you look at the fixed income market, even on a conservative basis from a dividend yield perspective, the average dividend yield that you'd see is between 6 and 8%, and some very fantastic dividend yield you have like 10%. So if I can get a fixed income instrument that can offer even 8% without any risk, with capital preservation, institutional investors may be willing to go for this rather than investing in stocks that may give them even 8% dividend yield. Save for capital appreciation, which is not guaranteed. So I would say that it's going to be mixed. We would see that there will be an appreciation in fixed income rates, which will be positive for investors. We always talk about the negative real return. So if we have that improved yield, we saw the Treasury bills primary market auction last week, Wednesday, moved from 4.7% to about 6.5% for the 364-day bills. But for the equities market, once you begin to see that upward movement in the fixed income market, it has a negative correlation with the stock market, as investors will be less attracted to the stock market.
So it's true that investors might be craving for the fixed income space at this time, seeing the goodies. But in particular, 96.325 billion naira was lost by 10 banks in a day. How does this come to you?
Okay, thanks. And if we're going to look at what the impact will be on the banks, it is expected that the banks will make more money in form of interest income. You know, once MPR, which is the reference, that's the monetary policy rate, the reference rate, the lending rate would also increase. But most loans that are given in Nigeria are floating based. It means that if there's an adjustment in the reference rate, there can be an adjustment in the loan rates that has been agreed before, during the lifetime of that loan. So for the banks, they would make more money. But you also recall that earlier this year, there's been that resumption of tax on tax payments on fixed income securities, save for bonds. So for a lot of the banks that have been enjoying tax-free investment in fixed income securities, now they will have to pay taxes, so which makes banks less attractive. So investors are also trying to, what would say happen to the banks in the last 1 or 2 days since that announcement has been made, is that the overall sentiment of around the equities markets, comparing it to the fixed income market, is what is also affecting the banks. When you look at the market on a market breadth basis, which is the gainers versus losers, you would see that compared to what we used to have before the announcement, that you have more gainers than the losers, you would see that it's negative because you have more losers than gainers, which means that investors are prioritizing the overall impact that the fixed income market would have on the equities market rather than being specific on the banking sector.
There's also this profit taking that we've seen, well, with focus on the telecommunications and consumer goods space. What impact is this having on the overall performance of the market? I'm also looking at Airtel Africa PLC hike to about 20.2%. Renewed interest in that stock too. Tell us around all of this.
Okay, thanks. I think the first thing investors, especially for short-term investors, needs to know that the market moves in a cycle. We feel that what we are seeing is a market correction because it's also abnormal that with the political risks, with the economic challenges, that our market is, with what is even happening in the global space, it's just moving in opposite direction. So what I would say we are seeing in the last few days is a market correction. A lot of those stocks that have gained significantly in the last few weeks, investors are trying to take profits on those stocks because when you also look at the overall fundamentals in terms of economy, you would also note that they moved significantly beyond those levels. So I'm not saying the prices of those stocks are not what those prices, but when you also compare them with the current environment, the risk environment, you would know that it's really very challenging. So you mentioned the likes of MTN that has got as high as 270 and is trading around 231 as at the last time I checked before this interview. You would see that a lot of investors bought it at 169 in December. So that margin is very close to 50%. So investors would still have that leeway to be able to take profit. For Airtel Africa, we see some investors also use it to repatriate. So beyond the fundamentals of the stock, because it's also listed on the London Stock Exchange, investors are able to use that to also repatriate. So you see that interest when in Airtel Africa because of the fungibility that it has. So beyond that, what would advise for short-term investors is to allow the market a bit of correction. But for long-term investors, it also still presents opportunities. When you see it's, if you are comfortable to buy when prices are high, you don't run when prices are coming down. It's the best time for you to begin to dollar cost average on your investment, so that when the market now moves in the positive direction, you'll be able to enjoy more positive upside. So by and large, we'll just say that what we are seeing now, it's a bit of market correction. You see the beauty sector, a lot of gains that we saw, and now market is already correcting itself.
But the NGX, an analyst like you, is saying that investors should also try to diversify their portfolios at this time. What are you really looking at? What should they be looking at this time? Taking advantage of also this time where the prices seems to be fair.
Okay, thanks. So if we talk about diversification, well, I will start with the currency diversification. So based on how our current environment is, investors should all diversify between Naira investment and dollar investments. And beyond that, when you also narrow down to the Naira investment, you should look at, based on your risk appetite, your investment objective, you should also be able to diversify across different asset classes, from fixed income that comes with less risk and also lower return, to stocks that comes with a bit of higher risk and may give you higher return. So you diversify. Even within the stock market, it's also good to diversify because the sectors also don't perform at the same rates. So if you diversify across the telecoms, the cement, the agri, the banking sector, because most times what you find out is when you review investors' portfolio, you see concentration rates. You can have 90% in the banking sector, for instance. Yes, there's liquidity, but if anything affects the banking sector, it affects your overall portfolio. So diversification is always very key when you are investing. And you are looking at the dollar investments, there's mutual fund, there's euro bond, there's dollar mutual fund or foreign stocks that you can also use to diversify. But it always varies because investment is always unique based on objective, your risk appetite, and it's always unique to the individual because the objective is always vary most times.
Very interesting stuff there. Anytime we talk basically about markets, digging deep so much, I like to ask about investors' confidence, particularly as we move to an election year. Many say that they'll keep sitting on the fence and waiting to see what's going to happen in that country.
Okay, thanks.
Let's
wait. Hear you clearly. As we approach election, we expect that the risk environment and as a result, we'll see more investors trying to sit on the sideline. But it's also good to note that the dynamics of our market has also changed. Domestic investors control over 70 to 80% of our market in the last 2 or 3 years. So in terms of its susceptibility to volatility, it has reduced significantly. We won't expect whatever is happening, it's detached itself significantly from the global space, like we used to have people selling down. So beyond that, the political risk is also a risk that investors would be bothered about. And now, what would compound that we would see going forward is the movement in the fixed income market, because the more the fixed income becomes more attractive, the less interest that we would see in the stock market. So there's that negative relationship that occurs between the two investments, or the two asset classes rather.
I'll take you again to the banking stocks. At that time, we'll always analyze to say banking stocks are liquid stocks. So would you advise, anyway, if you had to advise anyone, no, I know that shouldn't be free, would you advise that we should buy banking stocks at the moment? Or should we look at the beer companies?
Okay, thanks. I think when you look at the sector that provides more liquidity, in terms of liquidity is the ability to buy and sell whatever volume that you want to buy. The banking stocks still provide that and still accounts for close to 40, if not more than that, percent of activities in our market. And looking at it in terms of fundamentals, most of the top banking stocks have been very consistent in terms of dividend. So most investors, when you are looking for cash flow, you are sure that most of the top banking stocks would pay interim dividend as well as final dividend. So we'll continue to see that when you look at the average price to book for most of the banking stocks now, it's trading at significant discount, around 0.6 times compared to pre-COVID era. So there's still enough upside even for the banking stocks. But what we should notice that there's also a lot of several headwinds. There's that discretionary debit that a lot of the banks are also trying to survive from. There's the current tax that have been reintroduced on fixed income instruments. So despite the expected movement in expected increase in income that the banks will make from this the hike in MPR, we expect that the upside would also be very reduced. In era of political risk, in terms of disbursement of loans, they will also be very cautious because they also want to see clarity who will be the next president, who will be in terms of the policies that would also be guiding. These are some of the things that would inform them from taking positions or increasing the exposure in terms of loans to a lot of the corporates. So it's a mixed bag, I would say that, but I believe that when you are looking at the banks in terms of cash flow, it's good to also position in those banks because of their consistent dividend payment over the years.
Mr. Ebo, before I now let you go finally, ahead of the next MPC meeting, what do you think will shape the dynamics or the decisions, both globally and domestically? What do you think will determine decisions at that next meeting?
Okay, thanks. I think with what we saw at this last MPC, with that significant movement of 150 basis points, we expect that the CBN will want to see how the economy react, absorb this. It's going to be a wait and see approach. You know, when you look at other developed climes, they increase their rates gradually, but we are taking that giant step to increase everything, to increase it at once. So I don't see any major shift at the next meeting in July. The CBN will want to see how the market have reacted to this, whether it's attracted more FPI as projected, in terms of also the impact, that FPI impact on exchange rates, also looking at the inflation rate, both the core, especially the core inflation. So these are some of the things that the MPC will be looking out for, rather than making any major adjustment, because most time when you adjust, it causes a disequilibrium and you allow the economy to also settle and absorb some of those shocks before you want to make another adjustment.